Welcome back. Time for some business now. Bond repayments in the country will rise from tomorrow after the South African Reserve Bank raised the repo rate by 50 basis points. The latest decision will see the rate banks charge consumers for large purchases like homes and cars go up by 11.75%. Let's find out now what this means for you and I with Alan Rubin, Chief Operations Officer at ooba Home Loans. Alan, welcome again to Newzroom. Looking at today's 50 basis points increase, what are South African households looking forward to in terms of repayments for those loans?
Well, thank you, Matteo. Thanks for the opportunity. Yes, not great news for South African consumers. What we are going to be seeing is interest rates now, the prime lending rate at 11.75%, and many consumers won't necessarily have their borrowings at the prime rate. But what everyone is going to see when they wake up from tomorrow morning is an extra 50 basis points. And if one has to put that into numbers, if you have a home loan of R1 million, you've got an extra 345 Rand a month that you're going to have to pay, which is going to take your monthly installment up to 10,837 Rand as the interest cost on that R1 million loan.
Let's go back then to November of 2021. If somebody bought a house then and then had put their bond on a fixed rate, what would have been the benefits for somebody as interest rates go as volatile as they are now?
So if one was back in November 2021, the interest rates following the COVID period dropped as low as 7%. So if you were to look at that in terms of an interest rate going from 7% all the way up to 11.75%, you're talking about an increase in the interest cost that you're paying of more than 60%. Typically, when people look to fix their interest rates, what they get a not very favorable rate from the banks because the banks have got a price in the risk of rates. But I think if someone had been back then fixing their interest rate, I don't believe that the banks would have seen the kind of interest rate increase that's happened now, and I think you would have done a good deal.
People come to your website to compare these home loans and who can give them a better deal. Are those that are looking to sell their properties maybe looking to downgrade because it's gotten more expensive?
I mean, what one is definitely seeing that the home buyers, particularly first-time home buyers, are finding that the challenges around affordability of a home to be greater. If one went back just over a year, about 60% of the home buyers that ooba would have seen would have been first-time home buyers, and that number is now less than 50%. So there's definitely pressure on the first-time home buyers. But what you're pointing out is that within any housing market, you're going to get people who are going to have a change of circumstances, whether they're married, they're having families, or they're getting divorced, or they need to downscale. There are always going to be reasons for people to be buying property. What we have seen, which is particularly interesting, is that there is a lot of confidence being shown in the market by investors. And we're seeing, particularly in the Western Cape, that the buy-to-let, so the investors looking at investment properties, that's actually at the highest level that we've seen in many years.
And of course, banks have made a pretty penny as interest rates have gone up. How do you think they'll react, though, to this particular interest rate increase? Because, of course, consumers are under pressure. There is a chance they could default.
Yes. So, in terms of the way in which the market plays out, the costs for the banks of borrowing from the Reserve Bank have gone up, which is what the repo rate does. So the environment is also more expensive for the banks. But yes, their major concern is going to be the risk of default, that home buyers who took out a loan at the very lows of 7%, who are now finding they're having to service debt at 11.75%, are finding that more challenging. But I think what the banks have learned over a long period of time is to work with the home buyers. So if you do have a viewer out there that is under pressure, the key is to engage early with the banks and to make sure that they understand the pressure that you're under and to look for payment holidays or rescheduling the debt. There are always opportunities to do that. And I think the banks have really learned to focus on keeping people in their homes.
And just quickly before I let you go, are we going to see an increase in deposits then as banks try to make sure they cushion themselves against those defaults?
So I think the importance of deposits is also for the home buyer. If you do put down a deposit, what you're going to do is get a more favorable interest rate from the bank. And clearly as well, if you've saved before you invest in your property and put down that deposit, the amount that you're going to need to borrow and therefore the amount of interest that you are going to have to pay will be less. So a deposit is always a great idea for a home buyer, definitely something that people should try and save up for if they can. And yes, where the banks do the lending, they perceive that they've got lower risk. So that also does work for the banks, which is why you get the more favorable interest rate as a home buyer.
And what's the mood then in the property market? You know, are you seeing a lot of buoyancy, people getting into properties, or are you seeing a lot of flatlining because of these high interest rates?
So there's absolutely no doubt that the higher interest rates have caused the property market to slow. If one has to do a year-on-year comparison, and I'm talking specifically about the buyers who are buying using bank finance credit to buy as opposed to the cash buyers. Cash buyers are going to be more sentiment-driven, and there are other factors that are affecting them. But when it comes to the buyers who are looking to borrow to buy, it's definitely more expensive, and we're seeing that the buyers coming into the market are about 20% down versus a year ago. But what that does mean, less demand for houses, does also mean that the price of houses is going to grow more slowly. And there what we've seen is house prices have risen by about 2% over the last year. And if you think about the fact that inflation is running at 7% or above, you're actually seeing across the country negative house prices. So that's a signal at some point to buyers that it's a good time to buy because home prices are getting that little bit cheaper.
All right, that was Alan Rubin, Chief Operations Officer at ooba Home Loans, talking about the tough market in terms of those repayments